Let's talk to them about the next trade here. Worries over China's economy continuing to hang over the commodity sector. As we mentioned, investors fearing the country will begin to curve lending as soon as its economy remains so hot. So is China a bubble? Let's ask Peter Schiff. Peter, you know, the concern in the market here is that China will start hiking interest rates, and that has really caused some pressure on a lot of these stocks. Your view is that it's not so bad.
Well, I think it is going to be bad for the United States when China starts raising rates, because that's going to put a lot more pressure on the dollar. You know, as the rates for the RMB go up, that's going to cause more money to flow out of dollars into RMB. And, of course, if the Chinese are not going to be expanding their money supply as much, they don't have to buy as many treasuries, and that means the Fed is going to print even more dollars to buy what the Chinese don't want.
Oh, hold on, Peter. Real quick on that point, though. I mean, if you look back when China was raising rates from 07 through 08, it was 17 times. The RMB didn't really move that much against the dollar. In fact, how can you even argue that the RMB moves on fundamentals? It's a managed currency, and the dollar's move against the RMB is totally independent of what they're doing on monetary policy.
No, what's going to happen is, even if they hold the RMB flat, the fact that rates are rising on the RMB, if there's no downside to the RMB because it can't fall against the dollar, then people who hold dollars are going to move to RMB to get the higher yield. There's no downside.
People? Chinese investors or U.S.
All
investors?
over the world, and people will do it on leverage. People will borrow dollars to buy RMB. There's a carry there. Yes, they will. And ultimately, the Chinese are going to let the RMB rise. They're going to let that band go up. They can't keep the RMB down because then they have to flood their country with money.
The global economy that you say is so weak, Peter, China's still got to export their way out of it. They're going to keep their currency undervalued.
No,
they're going to play the same export game that they've done for the whole year. That's consistent with what you're saying. You're saying the world has no growth. China has to export their way.
They have 1.2 billion people. They don't have to export anything. They got plenty of people in their country to buy their stuff. Look at what's happening to the Chinese domestic economy.
Can I ask a quick question of Tim or Peter? In terms of money flowing into China, into the yuan, is that possible, or will China clamp down on the amount of hot money going into the country?
Well, I mean,
will control that?
Remember,
the money markets are not open to foreign players in the same way that they are here.
So the argument, Peter, is that that basically can't happen.
Yeah, China cannot tighten its money supply and tighten interest without stop buying dollars, without not buying as many treasuries, because when they keep money supply loose and they keep expanding, that's when they're buying.
They raised reserve ratios this week. They sucked $50 billion out of their market. That's what they did. It had nothing to do with treasuries.
No, they don't have any real tightening until they stop expanding money supply. And when they stop expanding money supply, they stop buying treasuries. That's how it works.
Hey, Peter, it's Joe. Real quick, we've got a correction obviously occurring in the marketplace right now. I know you've been a fan of being long gold. Do you see anything on the pullback where you'd say, you know what, this is an opportunity for me to get in? How do you want to be positioned in a portfolio right now? What do you want to be long? What do you want to be short?
I bought another gold stock for my personal account this morning. I mean, I buy every pullback in gold and gold stocks. You know, I have a job, I earn money, I got to invest it somewhere. I think gold's going a lot higher over the near term, over the long term. Gold stocks are going to go up. You know, whenever they go down, it's an opportunity to buy. There's always noise in the market. In the short run, oftentimes you get opposite moves, like the dollar rallied on this China news. But what China is doing is very negative for the dollar. So if you understand the fundamentals, you can always fade the short-term counter reaction.
Hey, Peter, is there any U.S. equity right now that you could say to somebody, you know what, I'd like to own that stock, whether it be Coke or Pepsi or anything? Is there anything in the U.S. area that you would say in an equity form, I'd buy that stock?
I own some U.S. stocks. I own some oil companies. I own some mining companies. You know, I'm not completely out.
Are there specific names that somebody could say, you know what, which oil companies are better than others in this environment? Which mining companies are better in this environment?
Yeah, I think the best ones, unfortunately, are abroad right now. But I own several stocks on my own account. But I just assume not to speak about them, because last time I did, I got a call from the regulators, and so I'm trying to keep quiet.
All right, we don't want you to get put in the clunker.
You can't
Peter.
keep quiet.
All right, Peter, thank you. Peter Schiff of Europe Pacific Capital, also the author of Crash Proof 2.0, the fine book we see there as well. All right, let's go back to Peter Schiff. Peter, I heard that you were laughing when you heard that Senator Reid strengthened his endorsement in the past 24 hours. I mean, ultimately, what does this mean in your view? I mean, Bernanke...
It seems like, you know, they got his mind right. But, you know, if I was a senator, and, you know, I'm running for the United States Senate right now in Connecticut, I would not vote to reconfirm Bernanke. I think he's done a terrible job as Fed chairman. In fact, he did a terrible job before we promoted him.
But who's better, Peter? Who's better? Who's better?
Well, I mean, look, a lot of people would be better, but unfortunately, we're probably going to get somebody worse, because I don't like Ben Bernanke because he was too easy. Congress doesn't like him because he wasn't easy enough. You know, when the president gave his speech yesterday and he blamed the financial crisis on greedy bankers trying to make a profit, he was wrong. The reason that greedy bankers were able to be greedy was because Ben Bernanke and Alan Greenspan were too easy. They made money too cheap, and of course you combine that with the guaranteed loans from the government, and that's why we had the financial crisis. And since we're repeating all those mistakes of the past, the next crisis is going to be even greater. I mean, there is a reason to regulate banks, because banks are taking a lot of risks with insured deposits.
You just said it. It's not rates. It's regulation, Peter.
Well,
you just said it. It's not easy
It's both.
policy.
But let me finish this key point. There is a reason to regulate banks because of the insured deposits. But the reason banks are taking so much risk with these deposits is because the government insured them. If there was no insurance, they wouldn't be taking the risk because the depositors wouldn't let them. So once the government already poisoned the market with guaranteed bank accounts, we need more regulation to undo the effects of the regulation that already exists.
Okay, Peter, we got to get going. We should also mention that Peter is a candidate for Senate in the state of Connecticut.
And I would also be a much better Fed chairman than Ben Bernanke. Hands down.
Okay.
My 7-year-old son would be
Peter.
better.
All right.
That's a little scary.
All right. Thank you, Peter. Thank